Morning folks, Jim here from FX Charts. Thanks for dropping by. Well, the dollar's a little bit better bid today, really, all round. This comes after the improved ISM manufacturing US data. It gave yields a boost, and that helped assist the dollar. And the US numbers came on the back of some mixed PMI data, manufacturing PMI data out of Europe. The overall picture was better, but the individual components, some of them are looking a little bit dicey. Spain in particular can't get its PMI number above 50 and retracted once again. Today's going to be fairly quiet on the data front. We've got the EU PPI being the main focus later in the day, and this comes ahead of the main events of the week, these being the ECB and the Bank of England meetings on Thursday, and of course the non-farm payrolls on Friday. Ahead of that, though, we've got the RBA today. We've got the final meeting of the year, and there won't be another one until February. No change is really expected, and the press conference is expected to be reasonably neutral. As well as that, though, we get the Australian Retail Sales and the Chinese Services PMI, so we could see a bit of volatility in the Aussie. So anyway, going to the charts, we're going to have a look at the euro to start off with. And the euro, as you can see, this is a 1 hourly chart, came off fairly sharply after the data, and back towards that 135.30 area that we were speaking about yesterday as support. Is currently just above there at 135.40, having been down to 135 and a quarter. Now the 4 hour charts, as with yesterday, the momentum is beginning to build to the downside. And although the hourlies are slightly oversold, but I'm just beginning to wonder if we might be getting a little bit of a bearish flag formation for a test back to this or 134.70, 130, 135 area. That remains to be seen. And in the meantime, we could just sort of drift along sideways, really. As I say, the 4 hours are picking up a bit of bearish momentum, and the dailies are completely flat, so I wouldn't be looking for too much in either direction. There is some good support down around at 134.70 though, and although I haven't got it on this chart here, the bottom of the daily cloud, the top of the daily cloud rather, is at around this area. So I'd be very, very surprised to see us go under this sort of rising trend line today. I kind of do like the downside though, and look for a top of around 135.80 or so, and a low down around sort of 135, the figure area. Moving on to the yen, well, dollar yen is it's still very bid. It's trading at just around 103 at the moment. Now the medium term trend is obviously higher, but in the near term, the charts look as though they might just have topped out for the session. And I wouldn't be surprised. We've got a bit of bearish divergence here on the 4 hour charts. So I think that we're probably going to drift around here. I wouldn't be surprised to see a bit of a move back towards 102.60. But in the long term, as we've said many times before, this 103.70 area is going to be the main resistance. Now, if we break that, it's quite interesting. There's really not an awful lot between let me just blow this up, between 103.70 and these two resistance lines here. They're both at about 105 and a quarter, and they're quite important FIBO resistance lines, coming off the major high here at where was that? So 135 area back in 2002, and this area here at 120. Where's that? 124, going back to 2007. So yeah, this 105 and a quarter area. If we do get through 103.70, I think that's the major point to look out for. Sterling remains reasonably firm. It has come off its high. It tripped up to 104.40 in Asia yesterday on stop losses. The UK manufacturing construction PMI was strong too. That held it up, but the US dollar has made a bit of a comeback, and sterling now looks a touch heavy to me. I think it might drift off a little bit back down towards 163 perhaps. Don't think we're going anywhere too far today. We've got the Bank of England meeting on Thursday, as I said, so I wouldn't be surprised to see a bit of range trading. Dollar Swiss, well, that's finally broken off the base of the channel that we've spoken about recently, and I think with the 4-hour momentum looks a little bit higher. The dailies aren't really doing an awful lot, so I'm not expecting too much. But if we can break through 91 the figure, we're currently at 90.85. If we can break through 91 the figure, we might head to 91.40. If I'm wrong on that, well, in that case, we're going back down here towards the base of the channel around about 90.30. Going on to the Aussie, well, we've got the RBA, the retail sales, and some Chinese data out today. So it could all be a bit choppy. In the medium term, I still think we're headed towards 90 cents and lower. But I'd just be a little bit more circumspect today. I wouldn't be surprised to see. I don't think the RBA are going to do anything. There's not going to be an awful lot in the statement, I don't think, today. So the retail sales might actually push it around a bit. But I think looking for a low of around 90.50, while a high of around 91. I don't think we're going up to 91.60 again today, but maybe this trend line 91.35 or so. We look at that as a trading range. Still prefer to trade it from the short side, although we do have to be a little bit wary of a short squeeze. Could take us up to the sort of top of the channel over the next couple of days. Don't really see it, but just bear that in mind that it is a possibility. The Kiwi's actually not bad. Not looking too bad at all. It gapped up after the much better than expected terms of trade yesterday, and it hasn't looked back. So there's a gap to be filled in there on the charts. But we're currently just trying once more to take out the neckline of the head and shoulders. Having been up to 82.25, it failed up there, came back down. I think we're going to just move around here. This is a daily chart, and this 200-day moving average at about 81.65 looks as though it could be a bit of a magnet. So, you know, and we've got the 100-day moving average down here around 81.40 or so. So 81.50. So I think we're probably just going to chop around here. That's an hourly chart. The 4 hourlies have got some positive momentum, so we could push up to 82.25. The dailies, though, well, they have been looking down. They're trying to flatten out, which backs up the theory of some probable consolidation for the next couple of days. So that's about it today. I don't see an awful lot really. As I say, we've only got apart from the RBA and the Australian data, we've only got the EU PPI out today. It does ramp up later in the week, and tomorrow we've got some GDP. I think the Australian GDP and the EU GDP tomorrow, and then on Thursday the US numbers as well. So until we get to later in the week, I think we might just generally chop around. But it will get busier as the week goes on. So that's about it for today. Have a very good day's trading, and we'll talk to you tomorrow. Cheers.